Students, today we are going to learn how to close different accounts. First, we will start with the realization account. In the realization account, we have to check which side total is higher. If the credit side total is higher than the debit side, it means there is a realization profit. And whenever we transfer this realization profit to partners capital account or current account, that time we have to pass this entry, realization account debit, to all the partners capital or current account. If in the old balance sheet current accounts are given, then first we have to make the current account of all the partners. So all the entries will be recorded through current account first. So this realization profit is divided in the profit sharing ratio among all the partners. But if there is a realization loss, then it will be transferred on the debit side of all partners capital or current account, and it is divided in the profit sharing ratio. So here the journal entry is all partners capital or current account debit to realization account. So these two entries you have to remember for realization profit and for realization loss. Next, for closing the current account, we have to check which side total is higher. Suppose there is higher balance on the credit side of the current account, then it will be transferred on the credit side of partners capital account. So here it is given in the first journal entry, if the current account shows the credit balance, it means the credit side of the current account is higher. Then the balancing amount is transferred to the partners capital account on the credit side. If the current account shows the debit balance, it means the debit side of the current account is higher than the credit side, then the balance is transferred on the debit side of partners capital account. Then next is for closing the capital account. We also have to close the capital account of the partners in case of dissolution, because the business is ending. Now here it is given that as the capital account of the partners show a debit balance, it means what? The debit side total of the capital account is higher. It means you will get the balancing amount on the credit side. For that balancing amount you have to write cash or bank. It means that particular partner has to pay this much amount to the business. So cash comes in the business, so that is why cash or bank account is debited to partner's capital account, because he is the giver. His debit side total is higher. But if the credit side total of the capital account is higher than the debit side, it means the balancing amount will come on the debit side. At that time you have to pass this entry, that is partner's capital account debit, because he becomes the receiver, and the partnership firm has to pay the cash to that particular partner whose credit side total is higher. So cash goes out of the business. So here partner's capital account debit because he is the receiver, to cash account because cash goes out of the business. So these are all the closing entries. Next, we are also going to give the treatment to the unrecorded assets and liabilities. These assets and liabilities will not be found in the old balance sheet which is given in the question, but under the adjustment it will be mentioned that some kind of asset is found at the time of dissolution, or some kind of liability is to be paid at the time of dissolution. Then what entries should we pass for that? First is for any unrecorded asset. If it is realized, of course we have to sell all the assets and we have to pay off all the liabilities. So any kind of unrecorded asset found at the time of dissolution, when it is sold, that time cash comes in the business. So here cash or bank account is debited and the selling price of that asset will be recorded to realization account. And if the unrecorded asset is taken over by any partner, then he becomes the receiver. So partner's capital or current account is debited. Agreed value, at what value that partner has decided to take over that particular asset. So that agreed value will be recorded to realization account. Then next is in case of unrecorded liability. If that liability is paid by any partner, then realization account debit to partner's capital or current account, because he becomes the giver, he is paying for that liability. And if the unrecorded liability is paid by the firm, then realization account debit to cash or bank, because when the firm makes the payment, that time cash goes out, so cash account is credited here. Next is about the treatment of goodwill. If the goodwill is given in the old balance sheet, then it must be treated like any other asset. That goodwill will be transferred on the debit side of the realization account like other assets. And when the amount is received for the sale of the goodwill, then it will be recorded on the credit side of the realization account. So here they have given the journal entries for that. If goodwill account appears in the balance sheet, then it will be transferred on the debit side of the realization account. So realization account debit to goodwill account. And when the cash is realized for the goodwill, then cash comes in the business, so cash or bank account debit to realization account. But if the goodwill does not appear in the balance sheet, but then the partnership firm receives the cash for the sale of goodwill, because of the high reputation, they may receive the cash for the sale of goodwill at the time of dissolution, then cash comes in the business, so cash or bank account debit to realization account. But if any partner purchases the goodwill, at that time he becomes the receiver, so partner's capital or current account is debited to realization account. Now next we are going to study the format of the realization account, because this is the very first account you have to prepare in the dissolution of the firm. So on the debit side, when all the assets are transferred from the old balance sheet which is given in the question, that entry will be recorded on the debit side to sundry assets account. So all the assets excluding cash or bank and fictitious assets. So here I will repeat again that all the sundry assets are transferred on the debit side of the realization account, excluding cash or bank or fictitious assets like formation expenses or accumulated loss like debit balance of profit and loss account, debit balance of partners capital or current account. Loan to partners will not be transferred on the debit side of the realization account. Then to provision on any liability. So here reserve for discount on creditors is recorded on the debit side of the realization account. Then to cash or bank, here if any amount is paid against any liability, then cash goes out of the business. So here the entry will be recorded on the debit side as to cash or bank account. Then to cash or bank account, again this entry is for the payment of unrecorded liabilities which was not recorded earlier in the old balance sheet, but at the time of dissolution the partners came to know that they have to pay certain amount against the liabilities, that is called unrecorded liability. So when the payment is made against any kind of unrecorded liability, it is recorded on the debit side of the realization account. Then the next entry is also to cash or bank. This is for the payment of dissolution expenses. When the firm is dissolved, certain expenses are incurred, and when the payment is made for those expenses, cash goes out from the business, so entry will be recorded. Then if any partner has taken over any kind of liability, then that partner's capital or current account is recorded on the debit side. Then the last entry is for the profit on realization. If the credit side total of the realization account is higher than the debit side, then the balancing amount is considered as the realization profit, and it is to be divided among all the partners in their profit sharing ratio and transferred to their capital or current account. So this is about the debit side. Now we are going to learn about the credit side. The very first entry on the credit side is transfer of all the liabilities. So here you have to remember that all third party liabilities are recorded on the credit side of the realization account, excluding partners' capital amounts, then reserves, any kind of general reserve, reserve fund, then profit and loss account which is given, or loan taken from any partner, that is not to be transferred on the credit side of the realization account. Only the third party liabilities are transferred. Then by provision on any asset, so here they have given the example, reserve for doubtful debts. So you know that when the debtors are given in the old balance sheet, and if any RDD is subtracted, then gross value of the debtors is recorded on the debit side under all the sundry assets. Here the gross value of the debtors is recorded on the debit side, but the RDD which is minus from the debtors is recorded on the credit side. So here the second entry is by provision on any asset account. Then by cash or bank account, when all the assets are sold, the business receives the cash. So cash comes in the business, so the next entry is for receiving the cash from the sale of asset. Now if there is any unrecorded asset found at the time of dissolution, that asset is also sold, so cash comes in the business, so here the entry is recorded. Then if any partner has taken over any asset, then that partner's capital or current account is debited, so here that entry will be recorded on the credit side of the realization account. And if the debit side total of the realization account is higher than the credit side, then there will be a realization loss which is divided among all partners in their profit sharing ratio and transferred to their capital or the current account. So in this manner we have to make the realization account.